Hello, everybody. Thank you so much for joining us. We have a distinguished panel of venture capitalists today who are going to help us understand their investments and their outlook. So in first name alphabetical order, we have David Sachs, who's the general partner at Craft Ventures, which he founded in 2017. David was also the COO of PayPal and the founder of Yammer. His investments include Facebook, Uber, SpaceX, and Palantir. We have Deena Shakir, who's a partner at Lux Ventures, where she's known for investments in Maven Clinic, Steady, MD, and Aiden. Previously, she worked at Google and GV, Alphabet's venture arm, and at the State Department under Hillary Clinton. And we have Garry Tan, who's the co-founder of Initialized Capital, which has already been in the news today for raising 2 new funds of $700 million. Congratulations, Garry. You can read all about it on Bloomberg. And he created blogging platform Posterous, which was sold to Twitter. And Gary's a former partner at Y Combinator. And Pat Grady is a longtime partner at Sequoia Capital, which, as you all know, is behind many of the biggest Silicon Valley success stories. When you hear about IPOs of companies like Sumo Logic and Snowflake, those were Pat's investments. He's also a backer of a service that got us all through the pandemic, Zoom. So let's kick it off. I was thinking about how tech this year, despite getting us through the pandemic, has also been blamed for everything that's wrong with society. So tech has ruined democracy and erased privacy and created all kinds of economic inequality. So what are all of you doing to help redeem tech? David, maybe we'll kick off with you.
Yeah, you know, I sort of don't agree with the premise of the question. I think that it's true that there is a lot of resentment towards tech, but I think that a lot of this is largely a media-created narrative, and I think there's a lot of resentment on the part of traditional media towards social networking and technology because social networking has disrupted and disintermediated traditional media. So the traditional media, I think, would love to see social networking, social media reined in to a much greater degree than it needs to. So I think so you know, I disagree with the premise of the question to a certain extent, but the part that I agree with is I do think that big tech has necessarily caused a lot of resentment in the country by virtue of the way that it's censored and limited the freedom of expression in a very one-sided way of the debate. Basically, you know, these big tech platforms claim they always claimed that they were going to be neutral platforms and neutral arbiters and not involve themselves in political debates. And what's happened is that they've really become very partisan in the way they enforce their content moderation and speech rules. And so as a result of that, half the country doesn't trust them anymore. And so I think that's the sense in which big tech does need to redeem itself. Is I think they need to start acting more like umpires and less like partisans. But I don't think that if you compare tech companies to anything else in the country, that they're somehow more evil or more broken than lots of other things.
Okay, point taken. So the media does rag on big tech a lot, but then we also have some severe problems like the disinformation you just referred to that seem to be exacerbated at the very least by big tech. So Deena, what do you think about
disinformation? I mean, what is disinformation? I mean, there is no like truth API that we could just plug in to social networks. So truth is really in the eye of the beholder. And you know what you're talking about when you say that social networks have to stamp out all disinformation, what you're doing is giving them a license to censor, because we can't all agree on what the truth is. And so what you see is what these social networks are doing right now is they're fact-checking or censoring or deplatforming in a highly partisan way. I mean, I could point to a lot of tweets that were simply inaccurate and you know, and they never get taken down. I mean, we have this whole I mean, there's been like one hoax after another related to, say, like ivermectin in Oklahoma. The Rolling Stone story. I mean, there's like so many that you could point to, and they're never taken down. The enforcement tends to be very one-sided. So, this idea of disinformation, it's a very tricky idea. I mean, I think the part that I agree with is that if somebody is not who they're pretending to be online, if they're inauthentic, if they're essentially committing fraud, that absolutely can and should be taken down. But if what we're talking about are simple disagreements about what the truth is, I think you really open a can of worms by giving these companies the power and license to engage in censorship. And I think it's exacerbated. Sorry.
No, I was
Crypto
just,
solves this, by the way.
From what you're saying. What was that, Gary?
Crypto solves this, by the way. Decentralization is the opposite.
Yeah.
Obviously,
I mean,
centralization.
I was going to ask, are we at a point where we're kind of working through these issues and this tension between giving big tech too much power over, which, as you say, David, could lead to censorship, but also we don't want people just to be able to spread crazy ideas very easily as they can now through social networks. Maybe we're at the worst of this now, and this problem, maybe somebody will create a truth algorithm, or there'll be some mechanism where this can be sorted out and people might look back on this era as the worst, or maybe it'll get even worse from here, who knows. Garry, it sounds like you have some thoughts on this.
Oh, I mean, on my end, I just really think that technology is sort of, it's not immoral, it's merely amoral. It's humans who have to have the morality and the decency of creating things for our fellow humans. And to me, tech is the thing that sort of pushes forward all of society. I mean, I grew up sometimes food insecure, the child of Chinese immigrants, and it was the Bay Area that came and made a place for me to be able to learn how to code, to be able to create something that could have touched 1 billion people. And today, the people here on this panel, like, that's our duty actually as venture capitalists. Like, people love to say that venture capital is this or that, or we're being vilified. But, fundamentally, what I still believe is that technology can be built by anyone, and we're here to give them capital to do it. And that is, and can be, and should be, and will be a very big tent idea, and I see it right now. People look at getting to $100 billion a year in venture capital per year. I think in another 10 years, it'll be $1 trillion. And what you will find is that the YC batches really will get to 1,000 or 10,000 companies a batch. And we will go out there and recreate the society by solving problems, not just by technology, but also by creating better organizations. And, all of the things you talk about with tech, they're really just early manifestations of what will be, right? Like, decentralization can solve the things that David is decrying right now. Centralization is a problem. Like, we shouldn't be, centralization is totalitarian, but I think that embedded in cryptocurrency is actually, and the pure wonder of the internet, right, is actually, that embedded in that is, actually freedom. And, I think that that's very much something that all of us would like to fund.
And Sarah, I would just add to that, I think historically there has always been, since the dawn of humanity, distrust around technological innovation, whether it was the invention of the printing press or, the Industrial Revolution. There are, so many examples in history. But when we talk about tech today, we're not talking about a separate sector anymore. We are talking about the way that virtually everything is done. There are nearly 5 billion people on the internet. This is an era of abundance. Technology permeates everything from the hallowed halls of government to the way that retail is administered in brick and mortar. And so I do think there is a bit of an oversimplification and vilification around this notion of tech, which is really just the way the world operates, for the most part these days.
Pat, what's Sequoia doing to restore the injustices done to the reputation of technology?
First, I'd echo some of what everybody else was saying, which is the world has never created a more efficient mechanism for turning big ideas into lasting positive change than a startup. A startup is the thing that moves the ball forward for society as a whole, that increases the size of the pie for society as a whole. Now, that being said, technology is complex. Technology ecosystems develop at a very fast pace. And so there are always unintended consequences, and there's always collateral damage. And so the specific thing that we do at Sequoia, we're incredibly selective about where our money comes from. Our money comes from what we call great causes. So to give you an example, the Ford Foundation. The Ford Foundation is investing hundreds of millions of dollars every year in fixing democracy, literally in fixing democracy and solving these specific problems that we were just talking about. They also do quite a bit of work on wealth inequality. We also have quite a bit of money from organizations that focus on medical research. And so when a Sequoia investment makes money, the vast majority of that goes to great causes. That is the thing that we were doing to try to fix this.
Well put. And then to switch gears for a minute, I was thinking about how when the pandemic started, a lot of people were predicting a very bad outcome for the economy and for tech stocks in particular. And actually, the economy itself seems to be doing well again. But now we're in a situation where big tech stocks are wobbling. I saw a report this morning that the richest American billionaires had sold 40 billion worth of shares so far this year, double what they sold last year. Just seems like the outcomes for a lot of startups might be different than what we were looking at a year ago. Has the black swan moment that a lot of people were predicting for the start of the pandemic just been delayed, and is it coming now? What's the future going to look like for some of these startups that might have had excellent exits until recently? Garry, I'll let you take that one.
Well, for us, we really want to stay very, very early. We were the very first investors in a company called Coinbase, for instance, with Brian Armstrong being a single person just writing code, trying to figure out, reading the Satoshi Nakamoto white paper and figuring out we need to make a sort of a GitHub, a centralized sort of cloud solution to allow people to even have wallets, period, as an on-ramp to true decentralization. And so when you talk about people who are just starting out from nothing, sort of what happens in the public markets basically doesn't matter, because what's happening at the very, very early stage and throughout that journey is that it is sort of 10,000 steps. And I think when you fund things that early, we have to continue to invest both in good times and lean times. And even Sequoia is, sort of, it's been amazing that, for instance, their constancy around the Y Combinator community, got them into Airbnb in 2008, 2009, which was right after the RIP Good Times. And so to me, that is the best indicator of, we need to continue to fund, in good times and lean times, no matter what, because this whole tent is going to continue to grow. And I think technology is just starting to have its impact. It's actually accelerating from here. And the number one thing I want people to know is that there's a place for them. If you can code, if you can design, if you can create products for other people, it's entering into all the other parts of GDP. It's amazing to me, but like digital healthcare, for instance, healthcare is one of the largest markets in the world, but only now is it starting to see the fruits of software engineers and designers, and not just that, also true scientists coming in and shaking things up, and that is actually empowered by lowered cost of capital. So low cost of capital for people who can create things from nothing, that is the most powerful and the best time ever. And the only thing that's tough is hiring.
So are VCs going to keep paying these blockbuster prices? How will this current market affect valuations of startups? And David, what do you think?
Yeah, I think the crash is already here. It's just not very evenly distributed. I think the reality is that something has changed in the markets. If you look at growth stocks in particular, they're down anywhere from 30 to 50% since the high on November 8th. What changed? Starting at the beginning of November, you had some very hawkish Well, first you had inflation. The print on inflation was much higher than expected. It was something like 5.1% this summer. The official consensus view was that was transitory. Then it went to 6.2%. Then more recently it was 6.8%. So you've had this huge spike in inflation, and then you've seen a much more hawkish stance by the Fed, indicating they're going to raise interest rates. So as a result of that, the public markets have been correcting for the last 5 weeks, and in particular, any growth stocks in the crypto markets, anything with that sort of long dated has seen the greatest correction. So I do think we are going into a different environment. I think it's hard to say exactly where we go from here. I think there's sort of two possibilities. One is that this is a one-time correction and reset of valuations, and then things kind of keep going back up and to the right. The other possibility is that we're actually in for some sort of more protracted slide, because really over the last 20 years or so, we've been in a declining interest rate environment. We haven't really been in an increasing interest rate environment for a long time. And if we're headed into one of those and the interest rate, increases, again, it's protracted, that could create a pretty negative environment for growth stocks. I think Garry is right that, being early stage investors, we're very insulated from what happens in the public markets, but we're not completely insulated. I mean, ultimately, there's a trickle down effect where, the growth stage kind of crossover investors, their models are based on comps in the public markets. So those growth valuations are going to come down, and then, that will eventually trickle down to the Series A and even seed stage. So, I think we could be in for, I don't know if it's like a rest in peace, good times type scenario, but I think we're in for a correction or downturn or bear market that we haven't seen in a while. And I think founders need to be aware of that. I would say that if you've got a term sheet outstanding, I would close that money very quickly, because I think that venture markets are in the process of trying to find a new level, and based on what's happened in the markets. And I don't think that process is quite over yet.
Sarah, I'll add to that a little bit. Yeah, I'll add to that a little bit. I think that was well said by David. We have an expression at Sequoia, which is when you think about a PE ratio, focus on the E, not on the P, meaning focus on the earnings power of the business or the earnings potential of the business, not on the multiple at which that trades, not on the prices, which are determined independent of you. It's determined by macroeconomic variables like interest rates and other things that are out of your control. And so when we look at the earnings power of the businesses that are being created today, there are actually some very interesting things happening, more so than a few years ago. So the last 15 years or so, we've been propelled by the cloud and mobile transition. That's fairly mature from a venture capital standpoint. So a lot of the category champions have been crowned. But the question then is, what is the next 15 years? And there seem to be two answers emerging or coming into focus. One is crypto. And on the crypto side of things, I don't think we have had our Netscape moment. I don't think that we have had the triggering event that causes a Cambrian explosion of interesting applications to take shape. And so I believe, and we believe, that our best days have yet to come in the world of crypto. That's trend number one. Trend number two, the result of this cloud and mobile transition is an enormous amount of data that people can now do interesting things with. And so if the last 15 years was the transition from on-prem to cloud in the software world, the next 15 years is the transition from dumb to smart. Instead of just reporting the news, software will be able to make the news. Software will actually do your work on your behalf. And we're starting to see some very interesting examples of that emerge.
Great. I'd actually like to put a placeholder in the crypto discussion, but first, Deena, I wanted to ask you, what do you think is the most underinvested sector in startups right now, where people will look back in 5 years and say, oh, I wish I'd paid more attention to? What do you think people should be at?
I've been a loud and proud proponent that within healthcare, within digital health, that women's health in particular has been largely underinvested in. I am a proud investor in Maven Clinic, along with the Sequoia team and others, which was really a watershed moment for the industry. And now with Build Back Better, there will be $3 billion invested into maternal health. But these categories that have been relegated to niche, largely, due to a number of factors, ranging from the dollars that went into the early stage R&D to the composition of the investors around the table that were making these decisions has contributed to a lack of innovation that is affecting not only family health across the board, but societal productivity and our economic kind of well-being. So I think that will be an area where there's still a ton of room for innovation with trailblazers like Maven leading the way.
Great. Any of you others have some sectors that you'd like to highlight that you think are underinvested right now? You're in a ton of different areas.
I think sometimes the most interesting things are hiding in plain sight. And while SaaS has become a public market consensus favorite, it has started to become somewhat underlooked in the venture capital world. And we think this is actually the best time to go start a SaaS company, because a lot of what we've seen the last 10 years or so was a lift and shift of on-prem to cloud. And a lot of what we're starting to see now is things that have been fundamentally reimagined, taking advantage of all the benefits of the cloud. And I would give Notion as a canonical example of that. The G Suite was a lift and shift of the Microsoft Office suite. Notion has reimagined what productivity can mean in a cloud-native environment. We think we'll see more of those.
Great. And Pat, you've been talking about crypto. I'd love to get the other panelists' take on where are we in crypto? Is crypto, should we be thinking of I mean, you said crypto hadn't had its Netscape moment yet. Should we be thinking, is crypto kind of where the internet was in the mid-90s, or is that even the right comparison? Should we be thinking of crypto as like the dollar in the 1950s? Where are we in this trajectory? David, maybe you have some thoughts on that?
Yeah, I think the hard thing about crypto is, I mean, I think there's no question that it's an area of tremendous innovation, and I think there will be a lot of great things to come in the area of, you know, decentralized finance. It seems, I mean, there's been so little innovation in the world of the traditional world of finance over the last, you know, few decades that crypto is really an opportunity to disrupt all of that on a scale that we've never seen before. So it's very positive. I think the hard thing about crypto is that it's traded 24/7. And so just because we're bullish about like the crypto space in general doesn't tell you anything about what the price level should be. And you know, normally when people are asking you that question, what you think about crypto, they're really asking you like, should I be buying, you know, cryptocurrency XYZ? And it's you know, I've always had a hard time answering that question. You know, I'm not like a day trader, and you know, and actually, so the thing we did back in 2017 is we saw these crypto markets going 24/7. There are now, you know, a growing number of cryptocurrencies, hundreds of them, and it was causing us actually a lot of brain damage to be thinking about like what crypto prices should be. And so, Multicoin Capital came around. So, you know, Kyle and Tushar, they were founding their firm, and we actually made a founder bet on them that they would figure out this like 24/7 traded world. And so anyway, that's turned out to be a great investment for us. So, you know, I'm just kind of a boring old SaaS investor. And like Pat said, we see a lot of opportunity there. And, you know, again, I feel like trying to figure out the world of crypto, it's something where if you're not going to do it full-time or almost full-time, I feel like it causes a lot of brain damage, and I'd rather just like invest in the multi-coin guys to figure this out for me.
Garry, you backed Coinbase back in 2012. So leaving aside David's vast understatements of his own investing prowess, what do you think about crypto? Where are we in its trajectory, and how should startups be thinking about it?
Yeah, absolutely. I mean, I think that we're certainly in sort of a, you know, someplace between 1993 and 1995 sort of moment, in that literally on-ramps are still being developed. I mean, we're super proud of our investment in Coinbase. They're going to continue to sort of grow into, you know, a lot of people look at that as, you know, just a trading platform, but actually you should probably think of it more like Amazon Web Services. It's actually sort of the defining tech platform to actually hire and build the infrastructure to get there. And, you know, we don't really have quite the right on-ramps yet. It still costs several $100s in gas fees to, you know, confirm a transaction on the Ethereum blockchain, which is, you know, the biggest and sort of the most used smart contract blockchain out there. So, it's so early, things are so expensive, and we're still stuck with 640K right now. It's like we're in DOS 3.0 land or something. It's just so early that and I think the way that you really should think about it is follow the builders, find the engineers, find people who are sort of building the true infrastructure, and if they're truly earnest about building and not about a cash grab, that's something that we've learned through multiple cycles at this point. If someone is it's almost like the sword and the stone, honestly. If you are pure of heart, you will be able to extract the sword from this stone. And that's how I would really recommend people think about crypto. Don't do it as a day trading thing. Don't try and get in and out. Find really meaningful teams that are going to solve real problems. And frankly, that's the way, and buy and hold, right? Like there's no reason why people have to day trade. And, I don't recommend that either.
So building on what you said about finding the builders, finding the best engineers, I was thinking about how people have been discussing for years, Silicon Valley is losing its preeminence as a startup center. But for every year that I've been following venture capital, well over 2/3 of the dollars, 80%, have continued to go to companies in the Bay Area. But maybe Omicron is finally the thing that has changed this, has shown us all we can work from elsewhere. Deena, what do you think? How has Omicron changed startups?
Well, I think it's too early to tell. None of us even knew what Omicron was, let alone how to pronounce it just a few weeks ago. And so I think the discussion around Silicon Valley, has over the last year, 18 months, maybe 2 years now, has been very loud on Twitter. Many of us have been a part of that and discussed it. But at the end of the day, and I'm sure Garry and Pat and David can attest to this, we are mostly doing Zooms with founders, and I don't know where they are most of the time. And the founders in our portfolio are hiring, and as Garry I think alluded to earlier, it's an incredibly tough talent market out there, especially, well, frankly, actually every role, but certainly as always on the engineering front. And engineers want to work from wherever they're working, and so I do think there is a decentralization, if you will, of talent, and perhaps as well of where companies are located. But I don't think the magic of this of this geography is going away anytime soon. I'm a Bay Area native. I'm long on it, but I also think there will be many more communities to emerge around the country and around the world.
Pat, do you have any companies outside Silicon Valley?
We do. We have about 25 portfolio companies in New York and another dozen or so kind of spread around the East Coast. And then we also have companies in Latin America, companies in Europe. We cover a fairly decent amount of ground from here. Just building on what Deena was saying, one interesting way to think about what's happening is if you go back 20 years, the hypervisor and then the cloud sort of virtualized compute resources. The pandemic and the attendant tools like Zoom and Notion have sort of virtualized human resources, meaning they can come from anywhere. In some cases, we see people working multiple jobs at once. It is actually far more efficient for society as a whole for that to be the case. And so we see our best companies embracing people no matter where they may be. And increasingly, they seem to be showing up outside of the Bay Area.
David, you've got a few companies in LA and elsewhere, right? Do you have any in the heartland? Is that kind of emerging?
Well, I think we have one in Des Moines, and I guess we have companies all over the place now. I do think that COVID has broken Silicon Valley's network effect and sort of quasi-monopoly on tech. There used to be a very powerful network effect where it was true you could always found a company anywhere, but the Bay Area was always the easiest place to scale a company. I mean, if you were a founder and you need to rapidly scale your company, all the sort of the VPs and the long tail of talent, whether it was, trying to recruit a head of sales out of Salesforce or some sort of special technical architect out of Facebook, it was much, much easier to scale your company in the Bay Area because this is where all the talent was. And conversely, the talent flocked to the Bay Area because they knew this is where all the companies were being founded. So it was a very powerful effect, a very powerful lock-in that the Bay Area had for really the last 2 decades. And remote work has completely broken that, because now people can do their jobs from anywhere. I mean, everyone's doing their job by Zoom or Slack, or these types of tools. No one's really going to the office anymore. And as a result of that, you can really not only found but also scale a company anywhere.